Hey guys, so in today's video, I'm going to be teaching you a super simple Forex trading strategy that is perfect for beginners, great for people that have jobs and other commitments, and has simple actionable steps that you can take to make sure you only identify A+ setups. So in this video, I'm going to give you real life examples of trades that I've personally taken myself. And also I'm going to be showing you all the steps you need to take to make sure you can identify these setups. So I need you to watch this video all the way to the end because I'm going to go into detail about exactly how to identify liquidity, how to use the Fibonacci tool, and how to make sure you set your alerts so that you know when the trades are getting entered. But without further ado, let's jump straight into this video. So this strategy can be traded on all currency pairs, indice pairs, and also cryptos. However, I recommend that you start off trading on UJ, EU, and GU. After that, we are only going to be taking trades on the 4-hourly time frame. That's it, no other time frames. We're going to be looking for a sweep of liquidity. Then we're going to be using the Fib tool to identify our entry, and we're simply going to set and forget. That's it. So these are the steps that we need to take in order to make sure we identify only the highest quality trades. So let me give you an example of exactly what we're going to look for. So we want to identify where we are in terms of structure. So let's assume that we are in a bullish market structure. So we can see that we've got a series of higher highs, higher lows, and higher highs. So then what we want to wait for is we want to wait for price to come down and give us a sweep of liquidity. Now that can be in the form of liquidating a prominent low. It can be in the case of liquidating a trendline liquidity. Whatever the case may be, we want to wait for a sweep of that liquidity, and then we want to see a break of structure. So let's just identify what's happened. We've had a higher high, higher low, higher high. Prices then came down and swept this higher low, and it has given us a sweep of liquidity. It hasn't closed with a body. It hasn't given us a market structure shift. It has simply just gave us a sweep of liquidity. After that, it has continued with the pro trend direction, and that is to put in a higher high. So now that we've seen that, we are now getting ready to start taking this setup. We then get our Fibonacci tool from the lowest point of that move to the highest point of that move. And now all we're simply going to do is set our entry at the 61.8, and then we're going to put our stop loss at the 100% and our TP at the 0%. That is it. Now every single trade is going to have a fixed risk to reward because we're going to be taking the trade based off of the Fibonacci tool. So now all we're going to wait for price to do is come back, tap us in at the 61.8 and go to our take profit. So it's nice and simple. All we're going to be doing is waiting to see what price does in terms of structure. We're creating higher highs, higher lows, higher highs, and then we want to wait for a sweep of liquidity just like this one. Then once price has continued and it's given us that brand new higher high, we're going to take our fib from the lowest point of that move to the highest point of that move. We're then going to take our entry at the 61.8 and we're going to put our stops at the 100 and our TP at the 0. That's it. Nice and simple. If you guys want to dive deep and learn a lot more about all of the concepts that I teach, then go down in the description, click that link to join the Lifetime Academy. Inside there, I have my full A to Z trading course, which talks about everything that you need to know, such as market structure, liquidity, fair value gaps, order blocks, order flow, you name it, I cover it all inside of my VIP course. Not only that, but once you join the Lifetime Academy, you're also going to get access to my daily trade setups, my daily futures live streams, my full community, and daily support to make sure that I can mold you into that consistently profitable trader. So click that link down in the description and I'll see you inside of the VIP group. But now that we've seen that this is exactly what we're looking for, let me give you a real life example. So here we are on US dollar versus the Japanese yen on the 4-hourly time frame. So first and foremost, let's identify where we are in terms of our structure. Well, we can see that price has put in this higher high. We've then had a high low, and then we've had a higher high. Therefore, we are clearly very bullish on the 4-hourly. So this is our high low right here, and this is our high high. Now, what we need price to do is we need price to come and sweep this low right here, taking out all of this liquidity just below this low. Now, the reason why there's all of this liquidity below this low is because all of the traders that are putting in their positions, they've got into long positions based on the trend being bullish, they've got their stop losses below the most prominent lows, which in this case would be this higher low. Therefore, if price was to sweep this low, it's going to take out a lot of orders, a lot of liquidity, which can then be the catalyst for price to give us that move to the upside. So we're waiting for price to come and sweep this low. and then give us a continuation of the trend and go ahead and break this high. So continuing with that high time frame bullish bias. So if I play price on, we can see that right here we get a sweep of this high low right here. Have you seen that it didn't close with a body? It closed with a wick. This means we've now swept liquidity. We haven't had a market structure shift. So now again, we have a sweep of that liquidity, and then we get this massive impulsive move to the upside. Now this shows that we've swept liquidity and we've had an influx of orders coming into the market, which is giving us the indication that price wants to go higher. So if I continue to play price on, we can see that we've just continued with that massive momentum to the upside, and we've now gone ahead and put in a brand new higher high. So now that we've put in this higher high, we're going to wait for price to start giving us a little bit of a slowdown. We need to see that price is now looking to retrace. And as we can see, we've had 3 consecutive candles of price moving to the downside. This shows the intent of moving lower. So now we take our fib tool from the lowest point, which was this sweep of liquidity, to the highest point, which is the brand new higher high. And as we can see on screen, we've got our numbers, the 61.8, 50, and the 71. So we take our position, we put it at the 61.8, we put our stop losses at the 100, and we put our take profit at the 0. Just as simple as that. And as I said, each trade is now going to have a fixed risk to reward of a 1 to 1.63. So every single trade that you get into will have the same risk to reward. It's very convenient. It follows the plan. Every single trade that you take is going to be the same. So you need to make sure that you tick all of the boxes, and then you've got an A+ setup. So now if I play price on, what we can see is that slowly price comes in. And just remember that you've just set this limit now, and you're going about your day, maybe even your week, because you don't know how long it's going to take for price to come and tap you in. So if you've got a job, you can go about from your job. You don't have to worry about looking at the charts. You've put everything in. So if I play price on, we can see that right there we get tapped into this trade, and then eventually price then goes to the take profit. So altogether, this trade took from the point we saw the reversal to our entry, it took about 1 day and 8 hours, and altogether it took 5 days for this trade to hit our TP. Now within those 5 days, you haven't had to worry about the markets. You've gone about your day, you've gone to your day job, you've spent time with your family, whatever it is that you've needed to do, you've done. So this doesn't need to actively be managed, which is the beauty of this strategy, because it is perfect for beginners. It's perfect if you have a day job, and it's perfect because you can replicate all of the steps that I've shown you in this video. So let me give you another example. Here we are on euro versus the dollar on the 4-hourly time frame. So again, we understand where we are in terms of our structure first. So we've got a higher high, higher low, higher high. So now if we identify that the highest point of this range is right here, so this is our higher high, and this is the lowest point, which is our higher low. So now because we are bullish, what we need price to do is come down, sweep this low, not close with a body to give us a market structure shift, but sweep the liquidity, and then we need a continuation higher to close with a body. Now I really need you to watch this video because it's going to get a little bit complicated, and you're going to understand exactly what I'm talking about, because as you can see right there, we get this massive wick to the upside. This doesn't mean that just because we've swept the liquidity up the top that you should now take a short position, because you have to remember that our higher time frame trend is bullish. So because we're bullish, we need price to sweep the low so that we can take a continuation trend. We don't want to be trading against the trend. So we continue to play price on, and as we can see that right there, we get this beautiful sweep of liquidity. So we've swept this higher low right here. We didn't close with a body, and we've had this massive impulse to the upside. Are you starting to see a pattern? And then from there, we continue with that massive move to the upside, and we've had this crazy push, again, continuing that trend. And now we can see that price is looking to retrace. We've had this bearish expansion to the downside, which shows that price is now looking to retrace. So based off of that, we take our Fibonacci tool from the low to the high of that move, and then we take our long position, put it at the 61.8, stops at the 100, and we target the 0. And again, the same risk to reward, 1 to 1.6. Every single trade is going to be the same because we're copying all of the same steps. So now if I play price on, we can see that eventually price comes, taps us in, and then it just runs straight to take profit. So again, nice and simple. We followed all of the same steps as above. We identified all our trend. From there, we waited for a sweep of the higher low. We got that right there. From there, we waited for price to give us an indication that it was looking to retrace. Then we took our fib from the lowest point to the highest point. And then we took our entry at the 61.8, stops at the 100, TP at the 0. Nice and simple, replicatable. Anyone can do this so long as you understand how to identify liquidity, how to use a Fibonacci tool, and all of the basics that come with it. And again, if you guys don't understand this, then click that link down in the description to join the VIP group, to join the Lifetime Academy, where I'll teach you everything that you need to know to make you a consistently profitable trader. But that pretty much wraps up this video. I hope you guys got an understanding of exactly how to utilize this trading strategy. If you did, don't forget to leave a like, comment, and subscribe. But on that note, I'll catch you guys in the next video.